Tariff battles intensifies. U.S. President Donald Trump slaps a 30% tariff rate for the European Union and Mexico, while Canada gets 35%, all effective on August 1st. What this all means for the Philippines' biggest exports to the U.S. with SAPI President Dan La Chica. And the Bangko Sentral ng Pilipinas is set to impose strict controls on digital payments used in online gambling. America's major trading partners are scrambling to broker a deal with the Trump administration as the August 1st tariff effectivity approaches, but some are already preparing for a no-deal scenario. U.S. President Trump has persistently complained America's trade relations with Canada, the European Union, and Mexico. And this weekend, the leaders of the two countries and the 27-member bloc already received their letters, with Canada facing a 35% levy and both Mexico and the EU 30% come August 1st. Trump has cited large trade deficits as he tells Canada and Mexico that he is punishing them for their failure to contain the fentanyl crisis. And there's an additional reason in Trump's letter to Ottawa, a 400% Canadian tariff on dairy. Analysts say despite a sincere effort by leaders to reach a deal, they have to confront the unpredictability of Trump's trade policies. Former U.S. trade negotiator Wendy Cutler told the Associated Press trading partners are having a difficult time knowing where they stand with Trump on any given day. Without a guaranteed deal, countries hint on pressing forward with retaliatory efforts, but insisted negotiations are still preferable.
We have always been very clear that we prefer a negotiated solution. This remains the case, and we will use the time that we have now till the 1st of August. Since the very beginning, we have worked and now are ready to respond with countermeasures. We've prepared for this, and we can respond with countermeasures if necessary.
We are clear on what we can work with the USA, and we are clear on what we cannot. And there is something that is never negotiated ever, and that is the sovereignty of our country.
In an interview on Fox News' My View with Lara Trump, the president told his daughter-in-law that the tariffs would generate income for the U.S., shelled out from countries that supposedly took advantage of America for decades.
The potential of this country is incredible. It's been run very foolishly. It's been run stupidly, so stupidly. And some of the countries are very upset now because they've been taking advantage of us for 30, 40 years. And I had it stop. The money coming in, the tariffs coming in, and hundreds of billions of dollars are coming in, they're pouring in.
The Department of Trade and Industry is ramping up efforts to address the tariff hike imposed by the U.S. on imports from the Philippines. In my exclusive interview on Long Conversation Thought Leaders, Trade Secretary Cristina Roque said negotiations are still ongoing, with the Philippine delegation scheduled to fly to the U.S. this week for high-level talks. While there is no confirmation yet on whether President Bongbong Marcos himself will lead the negotiations during his upcoming U.S. trip from July 20 to 2022, Roque noted the president's presence would add significant diplomatic weight.
It's still not over, so it's hard for us to speculate at this time. It's also hard for us to give our we cannot give any information yet because there's really nothing yet until we get to talk to our counterparts. Yeah, actually we have a very good team. That's something that's of course what we can be proud of, and our team is really fighting for, of course, all our exporters, and we really hope to get the job done. So having the president, there's always a positive, I mean, it's always something positive and something that we can really look forward to.
Roque added that the possibility of a full-blown free trade agreement with the U.S. is still on the table. She reiterated that any FTA is good for the Philippines as it strengthens economic ties and advances the administration's pro-trade agenda.
The free trade agreement is really very important. The president actually is really for free trade agreement because that will really strengthen the trade between two countries or three countries, or that's something that we really need to push because once we have good trade relations or we have a free trade agreement, then it's easier for us to be able to sell our goods to that particular country. Let's say we just signed last year the Philippine and Korea FTA, which really benefited the agriculture industry, especially the banana. So then now their trade has been stronger now than before. So that's something that we're really pushing.
Catch the full interview on Long Conversation Thought Leaders only here on One News. In other news, the Bangko Sentral ng Pilipinas is tightening control over online gambling payments amid concerns about minors and vulnerable users accessing these platforms. In a draft circular, the BSP orders banks, e-wallets, and other payment service providers, or PSPs, to add daily spending caps, time limits, and biometric verification to ensure only eligible users can access these services. Under the same guidelines, PSPs must create a separate online gambling transaction account, or OGTA, with transfers capped at 20% of the user's average daily balance. Users may access the account for only 6 hours a day, with a 24-hour cooling-off period for excessive use. Loan features in the app must also be disabled once the account is activated. The BSP is also banning financial institutions and their employees from participating in online gambling activities to maintain public trust. Platform operators must meet strict rules on licensing, ownership disclosure, and money laundering compliance. Violators may face fines of up to 1 million pesos and possible license revocation. The rules take effect 15 days after publication, with a 6-month window to comply. And you're watching Money Talks. Coming right up, the Philippine Stock Exchange expecting to raise 185 billion pesos in capital this year. And SAP President Dan La Chica talks about the impact of higher tariffs imposed by the U.S. to the Philippines. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Trump's latest tariff threats pushed U.S. equities to retreat last Friday. The Dow fell by 0.6%, S&P 500 slid by 1/3%, and the Nasdaq declined by 0.2%. U.S. 10-year Treasury yields ticked up to 4.424%, and gold prices increased to $3,356 per troy ounce on the back of renewed tariff uncertainties. U.S. futures pointing to a decline when the markets open later tonight Manila time. The Dow, the S&P, and the Nasdaq all down by 0.4%. And Asian markets are off to a mixed start in the first hours of trading, with the ASX 200 slightly down by nearly 0.1%, Kospi Index up nearly 0.5%, and the Nikkei 225 in the red, down by over 0.4%. And let's take a quick check on the Philippine markets. At the get-go, the PSEI opening the week higher by 0.3% to 6,479. The stock market marginally declined last Friday, ending the session lower by less than 0.1%. The broader all-shares index slightly inched up, and the sectoral indexes were a mixed bag, with industrial leading gains and property leading losses. Let's take a look at the Philippine peso. Opens this Monday weaker, 56.60 to the dollar. Peso closed flat from Friday, remaining unchanged at 56.47 against the greenback. And the 10-year government bond yields virtually unchanged, settling at 6.246% from the previous close of 6.247%. And the Philippine Stock Exchange Index displays strong potential to revisit its May 2025 peak, says Ron Acoba of Trading Edge. Just looking at its technical chart, he points out a successful reversal of a recent downward breakout. This rebound reflecting both market resilience and renewed investor confidence as the index reclaims its key support level at 63.41. With a solid base in place, Acoba says the PSEI may now build a sustained upward momentum, positioning it to retest the 65.66 to 65.91 range. With our tariff theme, the Semiconductor and Electronics Industries in the Philippines Foundation, Inc., or SAPI, projected this year's exports to reach the same level as in 2023. That comes up to about $46 billion, driven by robust global demand despite tariff woes. But that was before Trump last week upped the Philippines' tariff rate from the original 17% to 20%. Well, with us now for more is SAPI President Dan Lachica. So good to see you again, Dan. Welcome back to the program.
Thank you, Cathy. Good morning to you and your viewers.
All right, so how do we work the maths then with 20%? Does that change your projections at $46 billion?
Absolutely. Well, just to clarify, at the start of the year, we projected flat growth compared to last year, which was about $42.6 billion. But we've seen some upticks, and that caused some optimism. In fact, personally, I thought we might hit, as you said, the 2023 levels of $46 billion. But, you know, as you pointed out, this tariff developments have been disappointing, and that might just temper our optimistic projections, if I might say so.
So what does that mean? Is $42.6 billion still going to be cut then, given the uncertainty? But then you made a mention that there are some light at the end of the tunnel there.
Yeah, there might be. In fact, we just had our board meeting last week, and there is that sense of optimism. But then again, it's just like when I'm asked from week to week what will happen, right? It's murky, it's vague, because it just is going to be impacted tremendously by the tariff rates. Because personally, we were disappointed. We were at 17%, and Vietnam was much higher than that, and now we're at the same levels. And Vietnam is one of our biggest competitors, if you will, in terms of attracting foreign direct investments and even exports. In the past few years, they tripled the semiconductor exports, and now we saw the light at the end of the tunnel with the lower tariffs, but it was disappointing because, as you know, the reciprocal tariffs was intended to minimize the trade gaps, trade deficit, right? And if you look at the trade deficit of the Philippines, which is what, about $6 to $8 billion, it's much less than what Vietnam's trade deficit is, or surplus. We're at probably 20x less, and so it was really a surprising development to see that we've been bumped up to 20% and Vietnam lowered to 20%. So that creates major concerns.
Right, and that takes away that comparative advantage that we thought we had. But you did make a mention there's some optimism. So where is demand coming from then during this tariff pause of a window?
We've seen some increasing demands in the automotive and, of course, data and AI market storage devices. But again, this will be tempered by the developments. And I'm glad that, as Secretary Chris mentioned, that we will be resending a renegotiate team, as I call it. The presence of the president will be very helpful. And of course, our also by Secretary Frederick Go. And I think personally, rather than just talking about trade, we really need to spell or highlight the advantage of the Philippines in comparison with, for example, in the U.S. Pacific strategy, we occupy a strategic location in the first island chain. So you count that, and of course the other industries or support that we provide for the United States. For example, the BPO industries provides a lot of services to U.S. multinationals, and our semiconductor industry, we have a lot of U.S. multinationals here. Well, the good news is there's this you might what you might call the Section 232 of the 1962 Trade Expansion Act of the United States. It's decades old, but that was the reason we still enjoy some exemptions in the semiconductor space. And I just hope that that doesn't change, and we just need to take advantage of that. And also some...
Yeah, just picking up on those exemptions, I understand that we are still exempted when it comes to the integrated circuits because that's our major export product. But the ones that are not exempt include the electronic manufacturing services. Is that correct? And what kind of a dynamic are you seeing between these two revenue drivers?
Well, that's correct. 7% of our exports, something like $32 billion last year, were in the form of integrated circuits. We do the assembly, test, and packaging of wafers here in the Philippines. But that Section 232 covers also some selected EMS products, including parts for computers and even cell phones and communications electronics. But by and large, our EMS exports range from 3 to about 7%, and we just hope that if anything else, that's lowered and not increased because of this tariff discussions.
Okay, so what have SAPI members done in the interim during this tariff pause in terms of diversification or maybe even thinking about the future, about investing so that we can rise up the value chain and really be competitive against Vietnam?
Well, it's a sticky wicket, if you will, because on one hand, like Secretary Chris said, we have to, increase our renegotiating policy. Obviously, it's not going to be a retaliation. We're not in a position to leverage out of that, but just basically highlight the partnerships between the U.S. and the Philippines that spans decades, if you will. And so whether it's EDCA or the Pacific Strategy or the provision of services for the United States, we've been a long-term ally of the United States, and we need to leverage on that. As far as the industry goes itself, back to your question, the FDIs are controlled by the headquarters, right? They make the strategic decisions, and a lot of plans were put on hold because of this tariff discussions. But the thing about it is that you don't know what's going to happen from week to week or month to month. I thought we were in a good position with the 17% tariff. Only Singapore, which is not really a manufacturing powerhouse nowadays, it's lower, it's 10%. But now, that we're at the crossroads. And part of what we need to do really is to look at the supply chain, look at the product mix we have in the Philippines compared to Vietnam. In fact, we're talking to DTI, we're talking to the American Chambers to get a sense of what, to drill down the products and semiconductors and electronics manufacturing services, where we could get leverage or position ourselves to take advantage of those differences in terms of tariff rates for the line items.
Well, the president is going to the U.S. on July 20 to 2022. What would you like for him to propose as the best possible outcome for tariff talks?
Well, again, go back to the premise for this reciprocal tariffs. The fact that our trade deficit between the U.S. and the Philippines is not really that high, $6 to $8 billion. That's not high. And of course, the strong partnership that's also been strengthened with the term of President Marcos, capitalize on that and the services that we provide. In the meantime, from an industry perspective, the Philippines is still a good destination site for investments. And in terms of the industry itself, we'd like to, with the CHIPS Act of the United States, they're going to be producing a lot of the high-tech wafers, and somebody has to do the assembly, test, and packaging, which will happen in the Philippines, part of 6 countries that are going to be strengthened for the advanced assembly, test, and packaging. We're building up our integrated circuit design, even our EMS product mixes, and we have a proposal for the government also to look into the semiconductor wafer fab. Our neighbors are just being aggressive in attracting front-end semiconductor wafer fab investments. Of course, we don't have the money to put that up right now, but maybe baby steps, if you will, in coming up with a semiconductor wafer lab. And to show that we, as a proof of concept, that we can do this and eventually attract investments in commercial wafer fabs. So that's kind of moves up the value chain from just assembly, test, and packaging.
But is the industry, still holding out for the CHIPS and Science Act? Because Trump as early as March told U.S. lawmakers to get rid of the law, wanting to use the proceeds instead to pay debt.
Well, in fact, that was one of the fallouts of the reevaluation of this funds and grants and aid. In fact, I was involved with the USAID project as the chief of party of the Advanced Manufacturing Workforce Development, which was a good initiative of upskilling and plugging the skills gap for our workers, including the semiconductor and pharma industries, working with the Unilab Foundation. However, that was stopped, and in addition to that, we were actually in Phoenix last November with Secretary Kiko and Secretary Sunny to kind of learn more about this advanced assembly, test, and packaging. And this was supported by the ITSI Fund, which is a $500 million initiative carved out of the CHIPS Act. But that's been frozen too. I hear that that's going to be resurrected, but it remains to be seen. So that kind of hampered our initiative to develop our high advanced assembly, test, and packaging. But we hope to see a reinstatement of that grant.
Yeah, hope floats still, but is a free trade agreement possibly the best possible outcome here with the president going to the U.S.?
Well, that because today without any FTA, whether it's a unilateral or bilateral, we can't even supply to federal government projects, right? So that's impacting our EMS industry. So that would help, and the fact also that we reconcile the differences between the trade deficit and the tariff act and rationalize that so we can hopefully get the lower tariffs again, 17% or even lower.
Are potential foreign investors, though, inquiring? And if so, from where and how many of those inquiries and or pledges have turned into actual investments in the first half?
Well, as I mentioned, the FDIs are decisions are being suspended. Other than what has been made already in the Philippines, committed to the Philippines, and we've seen some of that. But then again, we've seen some capital flight also because of, the sins of the past, if you will. That's why the Create More Act is really going to be very helpful to reinforce the confidence of the Philippines by way of FDI investments. Can't get into the details, but we're seeing some FDIs for electronics companies, but hopefully we will see an increase in that. In terms of inquiries, we've seen a lot. In fact, interestingly enough, even PRC has come to the safety office to investigate how they can promote investments from China, moving out of China to the Philippines. So we're working with them and all other agencies. I was at the Malaysian embassy the other day talking also to explore how we can promote with that. I'll be speaking at the Malaysia Semiconductor Industry Association in this July, in fact, next week, to talk about what countries can do in ASEAN to collaborate and hopefully rationalize efforts to address the tariff acts. And by the way, if I may, I just also wanted to let you know that you're familiar with this, with the Philippine Semiconductor Electronics Convention exhibition is coming October 28 to 30. And we're inviting foreign companies to come over and see what we have in terms of opportunities for FDIs for the Philippines.
So before we go, 42.6 billion, is that going to stick, or are you going to have to ratchet that down because of the challenges that you just stated?
Well, I'm an optimist, so I hope we'll see some modest increase in that. But that remains to be seen. We'll just pray for it and hope for successful negotiations with the president and Sec Dec and Sec Chris, and hoping for the best, praying for the best.
All right, we'll keep it at 42.6 billion then. Thank you, Dan La Chica of SAFE. Much appreciate the update and insights there.
Thank you very much, Cathy. God bless us all.
And the Philippine Stock Exchange expects to raise 185 billion pesos in capital this year, driven by the upcoming initial public offerings. PSE President and CEO Ramon Monzon says the market has already raised over 62 billion pesos as of June. This covers one IPO, that of Topline Business Development Corp., 2 follow-on offerings, or FOOs, and 6 private placements. Another nearly 124 billion pesos expected in the second half, with 2 more IPOs, 1 FOO, a stock rights offering, and convertible warrants listing in the pipeline. Major offers include Maynilad, which may raise up to 37 billion pesos in October, and Han Holdings, eyeing 13 billion pesos in September. If all plans push through, the PSC could exceed its revised target of 170 billion pesos, well above last year's 82 billion. Monzon says there's also buzz of 1 or 2 more listings underway, possibly including e-wallet giant GCash. Major banks are now imposing a uniform 20% tax on interest income from deposits following the effectivity of the Capital Markets Efficiency Promotion Act, or CMEPA. Metrobank, Union Bank, and Security Bank confirmed that both peso and foreign currency deposits are now subject to a uniform 20% final withholding tax, regardless of term or currency. Previously tax-exempt peso time deposits over 5 years and foreign currency deposits taxed at 15% are now covered. The law replaces the tiered system with a standard rate, seen to promote fairness, transparency, and align the country with global practices. Existing placements before July 1st will keep their original tax rates until maturity. Meanwhile, clients with valid BIR tax exemptions will remain tax exempt under the new rules. And before we go, the new Superman film flew to a strong start, earning $217 million worldwide. So a flying start, are we? That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.
Around you.